Hi guys, Kar Yong here and welcome to the second episode of how to trade with Fibonacci ratios. Now before you continue on this video, if you have yet to watch the first episode where we talk about how to objectify a trend, make sure you go through that first because this entire series here is a build up. Okay, what we're going to talk about this episode, the following episode, you do need to have your foundation set out proper. Okay, and again, a very quick general big picture of what this entire 4-part series is going to be. We are talking about Fibonacci ratios, and in the Fibonacci family, we do have retracement, extension, and expansion. So we are breaking this 4 topics, this big topic, into smaller bite-sized content, so you'll be able to digest it better. Okay, and more importantly, you'll be able to straight away use what we have covered in this video, put it into practice, put it into application. Alright, now, so I assume that you have watched the previous episode and you are clear as to how we define an uptrend or downtrend, or when, the market is not in a trending environment. Now, with that understanding, this video, we're going to dive into what is Fibonacci retracement. Okay, so this video, we're going to focus on retracement. Okay, the subsequent episode 3 and 4, we're going to talk about expansion and extension. Of course, I will have a video where we put everything together. Now, before we go into the application and how we actually trade using Fibonacci retracement, it's very important that you as a trader to understand the concept of retracement, the concept of pullback, and of course a bit of understanding of what the ratios really mean. Okay, so generally, right, a very quick one over here, we talked about this in the first episode as well. Market, any asset, any market, the price does not move in one direction all the time. Okay, today we are talking about uptrend. It does goes up, it does come back down a little bit before it continue to the upside. Okay, so the idea of retracement is something like a pullback, a pause, or the market taking kind of a rest before it starts to continue climbing to the upside. If today we are talking about uptrend. Okay, so now give you an example, right? So let's take this is the starting point. Okay, so ground zero. Okay, and today we are looking at price moving this high. Okay, the means is going up. Okay, and of course within here you do have higher high, higher low, higher high, higher low. So let's just simplify that and say this is an uptrend. Okay, now when it reaches this peak and it starts to show some kind of like stopping, momentum is losing, sign of reversing. Okay, we can at this very moment take it as this is the high point. Okay, now the concept of retracement is when price is in an uptrend and it starts to show sign that is stopping. Okay, it's U-turning, it's reversing. That's where we call this part of the development a retracement. Okay, it's like a rest, it's like a pullback. Imagine today if you're climbing a mountain, you need to take some form of a break before you continue your climb towards the summit, right? So same principle, same concept, same understanding. Okay, so the idea of ratios, retracement, right? Fibonacci retracement, where does this ratios then come in? Okay, to give you some clarity and understanding to that. Okay, let's say this is ground zero. So in terms of mountain climbing, right? Let's say this is like on the ground, flat, right? Sea level 0%. Okay, this one here, let's say, is like 100 meters up. Okay, so we just put 100 units. Okay, and of course this is not the summit, that's not the highest point, and this is just a temporary pause. That's why retracement before price continue to the upside. Okay, so the idea here is if this is 0, this is 100, and we're gonna put this into a percentage terms, then this here, if you measure it vertically, okay, this is 100 units. Okay, cover my writing a little bit. Okay, so that's 100 units. Now the idea then, in terms of ratios, in terms of retracement of Fibonacci, is we want to understand when price is coming back, is going back, is in a retracement, we want to measure how much the price comes back. Okay, so if this entire vertical length is 100 units, and let's just assume price did come back maybe halfway point, which is equivalent to, let's say, 50 units, that's like half of the entire length, right? On the entire height. So that is equivalent to some traders call it the 50% Fibonacci retracement. Okay, so some of the common retracement ratios that you need to be perhaps familiar with, okay, is the halfway point, which is 50%. Okay, and we do have the golden ratios, okay, which is more commonly known as the 61.8 Fibonacci retracement level. Okay, so the idea again, just imagine, right, this is pulling back. So if price comes back by 50 units, it drops back 50 units, which is halfway point, that's a 50% retracement. If it drops by, let's say, 60%, okay, so that's around that 61.8%. So if it drops by 60 units, that's 61.8. Okay, so some of the very, very common ratios, of course, you have 50, you have 61.8, you do have the common 38.2. Okay, some traders also use the 786 or even the 888.6. Okay, so again, I want you to understand that Fibonacci retracement ratios, all these ratios here are just a measuring tool. Okay, and how we pull it, okay, this is important, right? How to use this tool. Okay, before we talk about the strategy. How we use this tool is that today, if this is the initial move, which is going up, that we would like to measure, okay, so we use the tool. This is common in most charting platforms. You want to start from where the initial move starts. Okay, this is the starting point, and you pull your fib towards where you want to end, okay, or where it ends. Okay, so in this case here, we pull from this point to this point, and in your charting platform, what will happen is all these ratios here will start to appear. Okay, so before we go into the strategy of how most traders actually use this, I want to give you a very good understanding so that you can appreciate what is Fibonacci retracement. Okay, so now once you understand that, okay, let's take a look at how is this being placed and being utilized as a form of trading strategy. Okay, so again, you do not want to just use Fibonacci retracement ratios solely as a strategy, but what most traders use is a complement. Okay, because at the end of the day, Fibonacci is just a retracement tool, is a measuring tape. Okay, now I'll give you an example of today. If market is an uptrend, how can you utilize Fibonacci as part of a trading strategy? Okay, to keep it simple, right? I want you to be very clear of this again. How to objectify a trend? A trend is only a trend when you have a minimum of 4 points. Okay, so in this case here, this is your 1, 2, 3, and of course, as of now, this is the 4. And what we have over here, of course, this 4 points is very clear. You have a low, you have a high, you have a higher low, you have a higher high. So that is a definition, very objectively being defined as an uptrend. Okay. Now, if today you observe a chart and you are looking at an uptrend, then as a trader, generally you want to be bullish bias, which means that you want to seek out for buying opportunity because the probability that price is going to continue higher is going to be significantly higher than compared to you looking for a sell opportunity. Okay, so the idea here is today we are in an uptrend, we want to seek out for buy. Okay, and the question then most traders ask will be, okay, if I want to buy, at what price, where, when should I be looking to buy and get in? Okay, and that's where Fibonacci ratios might come in to help you a little bit. Okay, so you also want to understand that this year, these are significant levels, right? Because that's where price have kind of reaction, of course, over here as well. Okay, and if price were to come down a little bit, okay, so this here is again a significant level, then okay, point 2 and point 3, they are what we call structural levels. Okay, I don't like to call it support and resistance because again, this concept, support can turn resistance, resistance can turn support. I'll just call it as structural levels. In other words, these are key levels that you might want to pay a little bit more attention to it. Okay, and of course, you can straight away just trade off based on this, right? So the idea here is if price continues to come back down towards this key level, it's a good place to look for buy opportunity. But at the same time, what you can do right now with the understanding of Fibonacci retracement ratios, you can add one more layer onto your analysis. Okay, so the idea here again, price move from here to here. Okay, I'll give you a very quick recap of what we talked about, right? So if price is going up, you want to measure your Fibonacci. You pull from where this point is to the end point here. Okay, similar principles, concept. Price started here and it went up, and right now it's starting to form kind of like a retracement, a pullback. Okay, so how you pull your fib? You pull it from here to here. So in this direction, because it's going up. And what will happen is, of course, the tool will illustrate to you all the essential level, like trade to 50%, 61.8, 786, 886. Okay, and the idea here is that if, let's say, your Fibonacci retracement ratios after you pull from this point to this point here, you realize that, wow, the 61.8 or maybe the 50% Fibonacci retracement comes in very close to your previous structural key level at this point here, maybe 0.2. Okay, then you realize that, okay, then there is what we call a confluence. Two things coming together. The structure level is there. There's a 61.8 Fibonacci level as well. Okay, this becomes the key zone that you want to monitor. So the idea here is if price comes back down and does a retracement towards this area, there's a high probability, okay, that price is going to U-turn and it's going to continue forming its uptrend. Okay, so this becomes your key buying entry level. Okay, and of course, where will your 100% be, right? If today you pull your fib from here to here, then naturally this level here is going to be your 100% retracement. Okay, so in other words, if today you're looking to buy, you're looking for this trend to continue, the retracement from here cannot break this. Okay, because if price continue to come down and break this, then you no longer have an uptrend. Why? You have 1, 2, 3, 4, but this point here is broken. And okay, let me just draw that in, right? Now let's say this happens, right? You realize that you do not have a 4 point, you do not have a higher high, higher low, and you are technically not in an uptrend anymore. In other words, okay, you can utilize this as your potential stop loss placement as well. Because if price break below this level, you're no longer interested in the buy trade because technically, you are not in an uptrend anymore. Okay, so of course, this entire thing you can flip it and apply it for the downtrend. Same principles. Okay, so that's why you realize the first step, okay, here, which we talked about in episode 1, is to first being able to define what is an uptrend. Because once you will be able to define an uptrend, then in this video here, that's where we talk about how to apply Fibonacci retracement to add a layer to your entire strategy, to your entire analysis, to help you to make a more informed trading decision as to where to buy, where to sell. And of course, the third step over here is then you need to calculate your risk, your placement of entry, your placement of stop loss, your placement of target. Okay, so I hope this video is clear. Hey, if you have any questions that you'd like to clarify, feel free to leave your questions in the comments below. I'll be looking through them and answer your questions. If not, okay, if this video here benefited you, okay, or helped you in some form or another, would also appreciate that you can drop your feedback, what you have learned, what you love the most out of this video in the comments below. Okay, and of course, if today you're still yet to subscribe to this channel, make sure you do that and click onto the notification button, because when we release the next episode and future videos, you'll be the first one to be notified. Right, so with that, we have come to the end of this episode. Okay, in the next episode 3 and episode 4, we're going to talk about Fibonacci extension and Fibonacci expansion. And the same way, we're going to actually put them together and share with you how it's being utilized as a form of trading analysis as well as trading strategy. So with that, I'll see you guys in the next episode.